Good morning, it's Monday, June the 28th, and you're watching AGORACOM Small Cap News TV. I'm your host, Paul Kandakos. AGORACOM TV is a daily, fast-paced show, bringing you the best press releases along with the halts at the open so you can hopefully profit from them and potentially find your next great small cap investment. Folks, hopefully you all had a tremendous week and got to enjoy the weather. And for those of you that are here in Toronto with me, it actually turned out to be a pretty good weekend, not as bad as we were expecting. Toronto, as you all know, was hosting the G8 and the G20 summit, and everything went relatively smooth, so it was a good weekend overall. Now, let's get down to business. I've got two press releases for you, one from the Canadian side, one from the U.S. side. I've got no halts to report on. So without any further ado, let's get down to business. Our lead story comes out of a company called Alexis Minerals Corporation. They trade on the big board. That's the TSX under the symbol AMC. The company is announcing the completion of a feasibility study on its Lac Pelletier property, which is located in Quebec. Now, the company is stating that the results confirm that the Lac Pelletier gold project is profitable and offers longer-term potential through exploration. We've got some highlights from the feasibility base case, which include production of approximately 33,500 ounces of gold over an estimated 14-month period from measured and indicated resources. Cash costs are estimated to be between $747 per ounce of gold, and total costs are approximately $981 per ounce of gold. It's not cheap, but it's still economically feasible given the price of gold is in and around $1,200 to $1,300 an ounce. Operating cost is estimated at approximately $156 per ton, and the mine is projected to generate a 61% internal rate of return from current reserves, and the payback period is estimated to be only 12 months, so that's obviously the good news there. Cost a little high, but the payback is relatively quick. Company's lost at 23 cents. High of 49 cents, low of 22 cents, market cap of approximately $51 million. Now moving south of the border, the company is China Nutrifruit Group. They trade on the New York Stock Exchange AMEX under the symbol CNGL. The company is a premium specialty fruit-based products company in China. They're announcing financial results for the fourth quarter ended March 31st, 2010. Got some highlights which include record net sales increased 26.5% year over year to $26.4 million. Gross profit increased 42% year over year to $11.5 million with gross margin of 43%. Operating earnings were approximately $8.9 million, and finally net income was $6.7 million, so very respectable numbers. As of March 31st, 2010, the company had $36 million in cash and cash equivalents. They're last at $3.13. High of $4.67, low of $2.79, and market cap just over $100 million. That's a wrap for today's show. I'm your host, Paul Kandakos. Hopefully you'll join us again here tomorrow. We've got more great press releases and halts at the open, and have a tremendous week.